It's interesting when I initially learned about crypto, and my initial thought was kind of had my regulator hat on, and I thought, "Oh, there's no way the regulators are going to get comfortable with this." As things went on, and I, one, became really frustrated with some of the challenges in traditional banking mostly as it relates to technology and kind of lagging in state of the art technology, I'll say. More than crypto itself, I was very excited about blockchain technology and how that, I believe, is the future of finance.
Crypto can be a potential diversifying tool only to the extent that it maintains sufficient governance. The issue is around decision making and whether those decisions have been premeditated, set into action through smart contracts, so on and so forth. If they weren't designed properly, there will be challenges. There's reasons in traditional finance why certain rules and regulations have been adopted and implemented. In fact, many things have been enacted in order to protect investors and also to protect the maturation and development of the industry.
Welcome to the show. I'm your host, Jerome Dwight, and today I'm joined by Gabby Coos and Julie Fellows, two incredible leaders at the forefront of the cryptocurrency revolution. Gabby is the COO of Blockfields, a global trading platform, and Julie is the CEO of Bankwise, one of the first regulated crypto banks in the United States. Together we dive into the current landscape, the challenge of mainstream adoption, and the immense potential crypto holds for reshaping the financial systems. Whether you're a crypto enthusiast or just curious about the future of money, this conversation will leave you inspired and informed. So let's go. All right, welcome everyone to the Challenger Podcast. Today, it's my honor to have two amazing guests that are such thought leaders on the topic of cryptocurrency. Julie Fellows, who's the CEO of Bankwise, and Gabriela Coos, who is the newly appointed Chief Operating Officer of Blockfields. So welcome to you both.
Thank you.
Great
Thank
to be
you very
here.
much.
Well,
It's great to be here. Thank you.
You guys are probably some of the most notable personalities and authorities when it comes to understanding crypto and also good governance around crypto. And I've known you for many years now, grown to respect and appreciate all the work you are doing in not just bringing responsible crypto investing to the public, but also putting good regulations around it and making it more transparent. You both have very impressive backgrounds, so I'd like to unpack those as well. So firstly, I'm going to ask Julie. Julie, you had quite a interesting career in traditional banking, governance, regulatory, and then you kind of saw something that attracted you in the promise of crypto. So maybe give us a little bit about your journey, how you got to crypto.
Okay, yeah. It's interesting when I initially learned about crypto, and this was a number of years ago, before, just at the very beginning, and my initial thought was kind of had my regulator hat on, and I thought, oh, there's no way the regulators are going to get comfortable with this. Pass. And so, then as things went on, and I, one, became really frustrated with some of the challenges in traditional banking mostly as it relates to technology and kind of lagging in state of the art technology, I'll say, and looking at that and understanding blockchain technology and where that can take us. And so, more than crypto itself, I was very excited about blockchain technology and how that, I believe, is the future of finance. So that's what got me really excited. And then I think the fact that Wyoming has done a lot of work in putting in infrastructure, the legal infrastructure around how to use blockchain and digital assets, cryptocurrencies, the right way, legally, doing it transparently, making sure there's clear definitions and the whole regulatory structure. So that was very exciting to me. And I just saw the opportunity for me to be able to use my skills and experience from traditional banking and regulatory compliance and governance and apply it to what's happening now in digital assets.
You were one of the leading regulators and on Wall Street, and you chose to kind of get into crypto. You were somewhat putting your own credibility on the line. It's a bit of a gamble, if you will, to move into an emerging technology, blockchain and crypto. So where did you find the courage to step into that? Or have you always been a bit of a brave soul?
That's a great question. Hmm. I think wanting to a little bit of frustration with the old and also seeing the possibility of the new. And I like building and creating things. And so I really wanted to create something new and attract exciting people who are excited to do new things. I love the opportunity of innovation and the type of people that are attracted to that. So I think that's really the excitement for me, more so than thinking about leaving the study behind. That there, don't get me wrong, there is risk there.
Yes. So, Gabriela, you've also, been no stranger to crypto, but you've had an interesting journey yourself with very interesting experiences before crypto. So maybe just give us a rundown of how you got involved with crypto.
Sure. So my background was really international economic and financial sector development. So I was always kind of in this position of building and walking into what we consider to be VUCA environments, or volatile, uncertain, complex, and ambiguous. Which crypto is all of those things. And so for me, I had always been advancing an established industry, so finance and accounting, in emerging economies and in emerging environments and contexts. And really, crypto and digital assets were sort of the inverse of that. So it was an emerging industry in established economies like the US and Western Europe and the UK. And so it was a very easy kind of step over. And my journey really in crypto began in about 2019, when I started to attend industry conferences and hear people's concerns or challenges, and really recognize that, especially when you have these VUCA environments and you're trying to mature an industry, that self-regulation and self-regulatory organizations, or SROs, can play a role in helping to either, in the near term, kind of create sort of a stopgap measure to be able to grow responsibly and to give builders and innovators and entrepreneurs some level of clarity. Um, or it could be sort of your long-term solution. And so it was around that time that a group of people engaged in the industry, including Julie and Bankwise, looked at kind of kicking off and beginning to come around with industry kind of core principles that could guide responsible growth and development and give clarity and comfort both to builders as well as people who are using these products. And so that was kind of the beginning. And then I really got engaged in a lot of almost like advisory services, providing support to the member firms. So over 100 member firms I oversaw, and kind of really delved in a little bit more on an individual firm level. And so that's where Blockfills came in. I started as the head of strategy, and as you've mentioned, just recently moved over as the chief operating officer, looking at how, firms that value and embody and seek to advance sort of that concept of responsible innovation, how I can have a pivotal role in helping to lead that forward. And so that's really been a lot of kind of the story of how I got here. It's been about 5 years in the industry. And a little bit about sort of my personal and professional ethos with regards to digital assets and crypto.
Fascinating. My son the other day, he's 16 years old, he told me he had downloaded an app and purchased crypto. And I said to myself, this is the future, where the next generation is clearly buying into digital money and digital currencies. I want to get your perspective on how we got here. Like, how did crypto become something that rivals the market value of all US dollars? So I'd love your perspective on how it all started. Was it the financial crisis of '08? Was it just a frustration in the global economy about centralization? We have a very broad audience, so I'm sure they'd be interested in a little bit of a history lesson. So, Julie, from your perspective, what do you think?
Yeah, that's. I think that it's probably some of both. Certainly with the Satoshi group and developing Bitcoin. There's those passive crypto, the individual cryptocurrencies. I think from my perspective and more broadly, I think there's some friction points that I would just talk about, that there's a number of either entities, people or types of companies in different industries that just don't get good banking services, both in the US and abroad. So there's a lack of access to financial services. And then there's other friction in that, because so many of those points are controlled by others, there's high costs. And so those pieces of friction, I think, are a lot of the reason why people are moving to using digital assets and stable tokens, and streamlining payments. And there's just so much advantage to that, and it's becoming more frictionless, and it's really improving access for many people. And one of the things that I love about the promise of Bitcoin, and actually digital or blockchain technology and tokenization of real world assets, is it enables the democratization of wealth creation. So more people can get involved in investments earlier and see that great rise in the value of those investments. So that's one of the things that I think is driving some of this. There's lots of reasons.
Yeah, it's great. Gabby, what about you?
Yeah, I'd have to agree with the idea of trying to democratize, enhance engagement. I think we saw a lot of interest, especially as, apps and, online banking took foothold, a few decades ago, as people became more comfortable with leveraging technology and the intersection of technology and finance. I think it was kind of a natural, sort of transition for people to then start to think about digital money or digital currencies, digital assets, crypto. And so, one piece of this, I think, is the fact that you have such a digitally native demographic that's coming up who expects things instantaneously. They've been somewhat, trained in this mentality of, I push a button, something happens. I'm not going to wait, 5 to 7 days for a check to clear. I'm not going to wait for, a wire to be sent or received. It's my money. I should have access to it. I have access to everything else. I should be able to control this as well. And so I think that mentality has obviously help to cultivate a certain expectation, and that expectation kind of uh, nicely intersects with where we see digital assets and crypto going. So I think that piece of it, that participatory, that online engagement, that digitally native demographic and age group participating in this space has been sort of a huge, I think, catalyst for digital assets to be successful. In addition to that, though, I think you're also seeing a strong desire for alternatives to fiat based transactions, especially overseas where you have a significant degree of volatility in national currencies, some level of worry or concern with regards to monetary policy and management, and a high degree of orientation with a global community and a desire to be, I think, more engaged in that broader global financial community. And, where perhaps, especially in countries where you have significant percentages that are unbanked or underbanked, the ability to engage, electronically through NBFIs, and then I think through telecoms and their, kind of pseudo banking solutions or payment solutions. This is all sort of a natural progression that I think resonates very well and aligns with some of the resolution of challenges that people face all over the world.
I couldn't agree with you more. I know for me personally, when I became an investor and then operated some of the crypto platforms, it was the attractiveness of the unbanked population finally getting a shot at creating some wealth and being brought into the financial ecosystem. I was shocked to hear that over $1.4 billion globally, if that number actually might be higher, don't have access to any financial services. And so the ability to use blockchain technology, crypto on a mobile device, they all have mobile, really changes the game. Do you feel that this could maybe bring about more equitable landscape in the world for these emerging markets, Julie?
I do, and one of the projects that I've worked on in the past and still involved with is with a group that's doing work in Africa. And so, as you mentioned, having mobiles and access to payments, but maybe not being fully banked. And what they're doing is helping to commoditize or tokenize commodities, which helps to reduce the volatility. And then they're able to, help provide some of these folks that are in agriculture to reduce the volatility of their inputs and outputs, and really help bring them up into a different strata in the economy. And I think that there's a lot of opportunities there, and it's really exciting to see.
Right. Gabby, I want to get your perspective on the saga of FTX. I think we're all still kind of, as an industry, recovering from the black eye. What can we learn from FTX so that the industry doesn't have a setback like that?
Mhm. I think some of the things to, kind of think about and reflect on are the need for like industry cohesion and professional maturity, a desire to not only be looking at the requirements as set out in law and regulation, but also looking at what could be good practice and really holding each other somewhat accountable to that in terms of industry peers. I think the other piece is to not necessarily throw the baby out with the bathwater when we look at traditional finance. There's reasons in traditional finance why certain rules and regulations have been adopted and implemented, and not everything um, is meant to be bureaucratic or red tape, and in fact many things have been enacted in order to protect investors and also to protect the maturation and development of the industry. Okay. So sometimes when we look at regulations, it's like, oh, it's just to protect consumers. It's also to protect the healthy growth of an industry and an economy. And I think sometimes people forget that second part. So what I would say is that what can we learn from this? It's to draw from some of the lessons learned from traditional finance as we continue to grow, to not get so FOMO or hyped up that we forget some of those like foundational values that carry forward regardless as to whether you're talking about digital finance or traditional finance. And also to contain and maintain a healthy degree of professional skepticism. And, again, I don't mean to like throw it back to the CPA background, but I feel like this is one of those areas where if something sounds to be too good to be true, it probably is. So this is where I think, you know, there's a lot of importance that needs to be placed on, really kind of keeping a level head, getting excited about and supporting the evolution of the financial sector towards a digital future, but also remembering that there are many times underlying reasons. And history, may not always repeat itself, but it often rhymes. And I think that when we look at some of the challenges that we may say or may see going forward, it's often good to kind of reflect back and consider if there wasn't something that similarly may echo the experiences that we're facing today that we can draw from in order to hopefully minimize the pain that we may feel for any potential issues or challenges. And then also, if there are ways that we can um, accelerate, some of the achievements and successes that we've seen or that we would like to see in that sector.
Can I just add one piece in there, just from my perspective? I think Gabby really hit it, but governance is so important. And no matter if you're a young startup or if you're a fully regulated entity, I mean, I think the fact that there were they sort of skipped some of the processes that you would expect, and governance is really important, and ethics are really important, and making sure that those align. And I think in the excitement and the hype of getting involved in the biggest thing, I think those were overlooked. I think it's really important, and that's why I feel like having a regulated financial institution in the space is actually a really great way to ensure the safety and soundness moving forward.
Yeah. Yeah, governance, good practice, ethical practices never go out of style, regardless of the season we're in. I want to talk about inflation. It's a hot topic, and obviously inflation means less purchasing power in traditional money or fiat money. So how does crypto provide an alternative, or does it provide an alternative to hedge against this inflationary period that we're dealing with? Julie, you want to go first?
Sure. It certainly does. And I think having alternative stores of value are really advantageous in mitigating the risk of devaluation of just traditional fiat currency. So that's absolutely an advantage of investment and use of cryptocurrency. Yeah.
Gabrielle, do you think about inflation the same way, that this may be an opportunity for crypto to actually fill a need?
I do. I think, as with everything, I'm going to go back to some of the governance components that Julie mentioned, because I think that crypto can be a potential diversifying tool only to the extent that it maintains sufficient governance. And whether that governance is baked in through smart contract Um, you can have certain crypto that, all of a sudden there's another like token allocation and now we've like doubled the supply. And so, I mean, some of the issues that you have, even in the, we'll say like analog monetary system, okay, those things aren't necessarily, solely contained within the analog system. It can easily happen in any system because it's again, it's not a function of whether something is or isn't digital or is not technologically enhanced. The issue is around governance and decision making and whether those decisions have been premeditated, set into you know um, action through smart contracts, so on and so forth, or if they are kind of very analog human involvement on an ongoing basis. If they weren't designed properly, there will be challenges. And so I think that, when we talk about crypto specifically, because it embodies things like Bitcoin, but also stable coins, it includes, sort of this broader kind of umbrella, um, altcoins. I think we just have to be very mindful that that's a big catch all category. And so within that, we need to be very vigilant about ensuring that we read the white papers, understand, how these things function in practice, what the governance is around the supply of the token or coin, and then, how that functions in practice. And then that perhaps can give insight into. But all of this is we're living through like a period in many cases of like a experimental period to see how this actually functions in practice, to what degree it decouples from and can be a hedge against inflation, and to what degree it begins to kind of correlate, and you see similar behavior. So this is all just to kind of say that I think there's still a lot to be seen. Obviously, different economists, different theorists have come out on various sides, have maybe picked their favorites with regards to coins, how they were designed, how the governance has been designed, whether it's fully decentralized or it's not. All of these things play into that evaluation. And so I think it's one of these things where you kind of still have to like do your own research and really deep dive in and then make a decision in many ways for yourself, like what you're comfortable with and what you believe, could or could not function in that capacity.
Just in speaking about coins themselves, and I know, Gabby, you run a pretty large trading platform. Would you say that Bitcoin, now having stood the test of time, at record highs, huge market cap, is now sort of the de facto face of all things crypto, and is sort of now the face of crypto?
I think it depends on who you talk to. I think there's a lot of people who, again, some of it is about, personal risk profiles. Some of it is about, people's affinity to a particular white paper or theory. I think it depends on the individual. It depends on how and in what way they're using crypto. And realistically a bit about sort of their own perspective. Again, some people hold crypto or trade crypto for a variety of different reasons, right? And so I think sometimes we maybe try to simplify it for the purpose of explaining it to people who are new to the space. We use Bitcoin as maybe a first example, as perhaps the most visible example that there is of what crypto is. But I think, it really does depend. It depends how DeFi oriented you are. It depends how, if you're really looking at the power of crypto or digital assets from a stable coin perspective and like moving money in terms of remittances, speed, all of that comes into play. So I think it is today perhaps the most recognized, but I don't know if it may depend on who you talk to, whether they kind of go along with that idea that that is the face of crypto. But that's just my kind of 2 cents.
Great. Julie, you're a seasoned regulator, and you've spent many years looking at regulation for cryptocurrency in particular, and the institutional crypto. Where are we in that journey, both from Washington, what's happening in Washington, federally, as well as in your jurisdiction? Are we moving toward a more common sense regulation? Has the Trump administration, incoming Trump administration, started to feel like there will be a little bit more movement toward sound governance and regulation, but still opening the doors for crypto?
I do think that the changes in Washington, the incoming Trump administration, the crypto czar, the different people that he's bringing into positions will be important in creating infrastructure and that regulatory governance for digital assets in the US. And certainly that's a necessary step. I'm really excited to see what's going to happen. I will also say that all of that takes time. And for the lawmakers to come together, agree on the law, and then the regulators have to get involved. And in the US, we have a really complex structure of regulatory oversight. We've got 3 federal banking regulators, we've got state regulators, we've got SEC, CFTC, FINRA. There's just so many different financial regulators in the US to get everybody on the same page and kind of rowing in the same direction, I think will take time. And so I also think that, having been an examiner, I know that within these large federal agencies, it takes time to bring the thought from the top and down into the examination teams. And so I think that, I'm looking forward to some positive changes coming. They're not going to happen immediately. It's going to take some time for that to kind of ripple through the processes. In contrast, what the beautiful thing about Wyoming is, they've already put the legal framework and all the regulatory infrastructure in place. And so we are really ready to take advantage of that in this gap time between when the rest of the US kind of catches up. And I'm very hopeful that the US will continue moving forward, because I think that there's such a gap between what has happened in other jurisdictions globally over the last several years and where we are today in the US, that we're just missing big opportunity in building out this ecosystem in a really sound way, doing it right with governance, with the appropriate thought around not having stifling regulatory requirements, but to enable that innovation, but also making sure that it's safe and sound.
Thank you for that. Julie, in the last few minutes we have in the show, maybe talk a bit about Bankwise, very innovative institution that you are leading, regulated, and just talk to us about what's in store from Bankwise.
Yeah, we're really excited to be moving forward. I think that we're a technology-driven company, and so we have state-of-the-art technology. We're not going to be, antiquated very soon. So that enables us to partner with our strategic partners to not only have state-of-the-art technology today to serve both commercial banking products and services, but also qualified custody of digital assets, the on and off ramp, and the inter exchange between those. So we're really able to meet the needs today, but also to innovate and build these products and services that we know will be coming as more and more companies see the benefits of blockchain, understand the benefits and capabilities of using this technology in their businesses. So I'm just really excited about what we'll be able to create, and how we're helping to collaborate with other innovators and build up this ecosystem.
Fabulous. Gabby, for your business, you're a trading platform and you have really a global perspective on your business. Talk to me about what makes Blockfills such a unique platform and what your growth strategy is going forward.
Sure. So a lot of what makes us unique is our ability to really provide bespoke solutions, both in trading and trading technologies. And so for us, a lot of that is working with both professional traders as well as institutions to ensure that they have all of what they need in order to be successful in unlocking, the digital markets. For us globally, a lot of that is about going where our customers are, having high quality customer service, and being able to support, people to the degree that they've become comfortable and they have expectations, given their experience in the traditional financial sector. So, for us, a lot of that is providing that same level of quality, confidence, and security that they've come to find in the traditional sector. And so that's a lot of what makes us successful. For us, we see a lot of growth in Asia, in the Middle East, in Latin America, and Caribbean. And we'll continue to grow very aggressively overseas into 2025 and beyond. So, very much looking forward to another exciting and record breaking volume year for us here at Blockfills.
I'm really honored to have had both you, Julie, and Gabby, great examples of leaders that are driving two very innovative companies in the cryptocurrency blockchain world, well regulated, thinking about the future. Technology meets financial services. This has been very helpful. I know our audience would have loved for us to keep talking for many, many more hours. We'll have you back on, and we're going to look for great things under the new Trump administration in crypto as well as your institutions. Thanks again for joining me.
Thank you.
Thank you.